Good afternoon, folks. All right, I'm just going to show you real quick what I did on the British Pound USD. I did do a recording, and the recording didn't turn out too well. And I'll show you. I'll show you the reason why. Here's the recording I had for last night. You see me actually getting in the trade as it was shooting down into London Open. And a few minutes after I went to bed, Murphy's Law kicks in, and my antivirus cleaning software thing pops up like that, and it stays there for hours the whole time. The price is doing what it's doing. I was unable to capture that and share that with you. So that's a little bit of a letdown. So you can see about 4.5 hours worth of recording was ruined with a photobomb by McAfee's antivirus. And I'm not affiliated with them, so this is not product placement, folks. All right, so let's go over to charts. This is the daily. This is the British Pound USD. Now, admittedly, last night I stayed up all night long watching the pound dollar. And I was looking for a specific scenario, which I'll outline in a few minutes. But for now, I want you to take a look at what's been going on the daily. We've had the pound dollar moving higher, and it looks to me personally that we're going to want to go above this high. Okay, so if nothing else, between now and say next Tuesday, I would look for an attempt to try to get up to that price point. So over the next week worth of trading, we had a nice wicked decline right from Asia last night. So I'm going to cover that a little bit as well. But as you can see, I'm trading down here near the end or the low of the day, buying down there. Okay, and the reason why I'm doing that is if you look at what's happened, every time we had these really long attempts to go lower, taking out equal lows here, the market rallies away. The market drops down aggressively in here, okay, clears out a short-term low here. The market rallies again, and we have a deep retracement, and we see that happening here intraday. If we go into a lower time frame, hourly chart, these are the levels I was actually watching, and I'll give you some of the framework in a minute. But we had these equal lows on the 4th of December, okay. We did run down initially, and I was watching this happen live, and it just went down there and beautifully hit that, and went right into consolidation here, and then drove lower, clearing out those equal lows. The first time it went through just by a little bit and left that liquidity pool there, okay. Price dropped down aggressively even lower to take out these equal lows, and exactly 20 pips below that takes us down to here at 133.88, and the bodies of the candles are respecting that. We did stab through it with a wick, but that also took us below these lows as well. Okay, so they really came down, took out those price points for sell stops that are resting in the marketplace. Now, my opinion is, if I'm accurate in my assumptions about where they're trying to take the daily pound dollar chart, that's above these old highs back here, and if that's the case, we have equal highs here. It's beautiful reason to expect that. And we've had equal lows taken here, and we rallied back away. We've gone below these equal lows, these equal lows, and these equal lows. So to me personally, until I see otherwise, and it will be in the form of being stopped out, I'm sure. But if we can rally from here, I think we're going to 35.55 as a weekly objective. If it goes beyond that, then obviously we'll have to consider the 36.60 level. Okay. Do I see that this week? Personally, no, I don't see that. But I think that we could obviously get above these highs here. And let's go back over to hourly. Okay, and drop down into a 15-minute time frame with these points of reference. we have an old low in here, price trades back up to that, and the equal lows trading through that, and the subsequent decline through a previous double bottom as indicated on the hourly chart. As price drove down into that and cleared those stops, I went in long on this candle right here. Okay, right in there. At that candle, it looks like, if I go through my recording, it looks like I only had about 5 to 6 pips of heat or drawdown against me, not counting the spread. So not a bad fill. I had to sit through a lot of slop and chop today, and we had the New York session set up in here, which I'll zoom in a minute and show you what that was. But we had both points of entry, the London Open and the New York Open, and we had a nice profit, or at least I had a nice profit on both positions. I have a remaining balance of one standard lot from the entry at London, and it's sitting right below these lows here. I was surprised that I didn't get stopped out. I was actually waiting. I said I'd have the video done around 2 o'clock, but it looked like it was going to come down and stop me out. And I was just going to wait for it to do that and then come back and give you the recap with that insight and post-trade result, but it didn't happen. So while I'm working with you live here, I do want to take off half in here of that last standard, and that way I don't care if it comes down. I'll take another piece out in a nice little area. So if it does break down in here and goes lower, then it really doesn't make a difference to me. I have such a small little position in here. I'll get 38 pips still with being stopped out and add another $190 of demo profit. So let's zoom in here and get a better look at that New York setup. Okay, so I have the lowest body in this low, and we're taking it all the way up to this close here. So this is the range between open and close, between these two reference points, this one here and this one here. Okay, disregard the wicks, we're not interested in that. And price comes down, does wick through it, but does not go below the low. So in here, I was looking for a reason to anticipate a rally up into the symmetrical price swing. And I'm going to go into a 5-minute chart now. Okay, and take this off. And I'm just going to take you over to the trade recap or account history, and I'll add all the price points, and you can see what I did in terms of entry and my exit points. Okay, here's my most recent exit. I get questioned all the time, am I doctoring these up after the fact? And I like to do this to show you that they are in fact entries and exits. And I don't personally know how to manipulate this to fake it. I don't know why they make such a big deal about it, because it's everything that I teach. So again, there's our reference points here. And if you look at what we show on this rally here, this is a low that was formed in the London setup, and we had a rally up and it drops down. We're going to look at this reference point right in here, and you'll see another optimal trade entry in here that further added confidence to me wanting to take this trade. So we had the range from this low up to this highest body, and price drops down into the 62% trace level here, and then exactly here on this candle at 12:15. So this is the New York Open kill zone. So trading right there, you could be a buyer. Now I didn't get that. It rallied away and it came back to here and started to rally again. And I thought to myself, well, I'm going to miss this if I don't do something with it. So all I did was key off of an order block, which is these down close candles. I viewed that as a bullish order block. When price trades down into that, area here, I was trading right into it as it was a bearish candle, and that was my point of entry. Took profit here, collapsing it, and then you can see the reference points up here, above target 2, above target 1, and if we look at the price point for the range right here, you'll see what I was targeting. I was using the low here up to the highest body here, and target 2, look where I was working those levels. If you could have watched the video I was doing without having that photo bomb of McAfee's antivirus thing popping up on me, you'll see me actually scaling out and taking those points of profit here because I was working that target 2 level based on this fib and target 1 here. Okay, and then again target 1 right now where I just bailed out. Those levels are in my mind when I'm looking at the chart. I don't have to have them on there because I know what I'm looking at. Once I get a feel for where I got a level or two that I want to be trying to scale out, you'll see the grouping, just like a person that shoots a gun at a gun range. They look at the spread on the target afterwards. This is why. Okay, target 2. You can see the grouping here with my exits. You can see the grouping here at target 1, and then you can see the exit I just did with you guys live here. Okay, and I have that remaining portion that if it comes down and stops me out, I really don't care. But if it continues, I'll be looking for it to run above these highs up in here around 34.80, and then up to my objective, which is 35.55 up here, right up there. That'd give me 162 pips. So that's that. But all in all, it was a rather difficult, sloppy day, personally. Took a lot of patience on my part to stick with this as an example. I'm just disappointed that that little thing popped up down here and prevented me from seeing or showing you the entire price action that was delivered for all this price movement in here. So hopefully you found this example insightful. Until next time, I wish you good luck and good trading.